Praise God. Um, so this is the first in our life series, and life by life we mean living intentionally in faith and excellence. And it's a program that the church has put together just basically to teach us about life and things that we do on a daily basis that will, help us as we move through everything that we do generally in life and in this country. And we decided to do the first one to base it on taxes, which is basically one thing that I know. It's more like a stress, and I'm sure it is for most people. And I want to thank Sister Dunkele Anifowoshe for making time to join us. I want to thank Kunle Akinshola for making time to join us as well. Just brief, I'm sure these people are not new to you guys. Sister Anifowoshe is a CPA, a tax consultant, and she owns, she founded our own tax consulting company and CPA company, I guess, that's what it's called. And Kunle, in his day job, is an auditor with the state, DHS, Department of Human Services, and is also the director of the church's VITA program, which is the
Volunteer Income Tax Assistance.
Exactly. So basically, we're just going to have a discussion with them about taxes, how it affects us. We talk to these about the basics and beyond. So basically, what are the tax issues that are out there? What are things that that we think about daily when we're about to file our taxes? Then also we'll talk about the misconceptions that people have about taxes, whether they should file taxes, when they've made money or not, or different things. And so basically, I want to thank you for joining us.
Thank you for having me.
And I have, I think the first question for me will be the elephant in the room. Have you both done your taxes for this year?
I have not done mine.
Mine is in process.
Okay. So you are a late filer, right? You file always very late, or what?
It depends on my mood, actually. And right now, I'm busy filing for other people. And since I know I'm not getting any money back, there's no point in rushing to pay the government.
So I think for me, the first thing that bothers me and I talk about is, why is it, I don't want to use the word complicated. Why is it stressful to file taxes?
Okay, first of all, thank you for having me. Good to see everyone again. So first of all, let me address what he said. Typically, I'm an early filer. And then sometimes, because I'm waiting on some documents that don't come in, I try to get my taxes done before it gets busy with the season. So when the other documents come in, plug it in and then send it in. So really, I guess because it's my job, it's not complicated. I think we need to have a good mindset. It is something that needs to be done. It's meant to be easy. It's basically a summary of your income and expenses. And then depending on if you have your business or if you're just a single filer, that determines what else goes into it. But typically, it's not complex. Yeah, the tax law is a bit, there's a lot of information. Like sometimes when some people ask me, oh, if I file with my kids, will I get more money? And my answer is, it depends. Because it depends on some other factors.
I think a follow-up to that will be, we all know that we're going to file taxes. Like we know we're going to file taxes next year for everything that we've done this year. How do we prepare for that? How do you prepare your prior year so that by the time you want to file your taxes, it's easier?
Rokun, you want to go first?
Okay. Like for us that are doing the VITA, we actually do taxes for people that earn less than 50,000 or less, the elderly, the disabled, and the people that have English limitations. And when some of them come and we file their taxes and they are going to pay back to the government, you know, they believe that because they did not earn a lot of income in the previous years, that automatically they should get a refund from government. And I always tell them that it's not automatic, you know. The fact that maybe your cousin or your brother did not make much income and he or she is getting a lot of refund from the government depends on so many factors. And when I look at their W-2, I always find out that most of them do not pay taxes during the year. Their job, at their job, they don't withhold any taxes, or they barely withhold anything.
So they do zero.
Sometimes zero, you know. And when you don't pay taxes during the year, automatically you have to pay whatever you did not pay in the previous year. IRS does not leave their money on the table. They will get their money back from you.
So please, always withhold something, even if it's $5.
So I always tell them that, okay, to forestall this kind of situation next year, when you get back to your office, go and change some things on your W-4. And I'll tell them, instead of taking a zero allowance, you know, instead of taking a 4, 5, or 6 allowance, take 0. And if you think taking 0 will not help you, still, ask them to be taking maybe some additional money, like $50 or $100 from every paycheck. At the end of the year, if they've taken more than they are supposed to take, you get your money back.
Makes a lot of sense.
Yeah. So in addition to what Brother Kunle said, if you own a business, it is imperative that you keep proper records from January 1st. Like something I do, already I have my tax file for 2022 going. So if you're incurring expenses, begin to file away your receipts. If you have a software system where you record your income and expenses, wonderful, record it as soon as possible. If you do charitable donations to like Goodwill, you collect your receipt, put it in your file. One misconception, I don't know if you're there yet, that I need to address. Sometimes, when I ask some people, because okay, filing your return, you either itemize or you use the standard deduction.
I was actually going to get to that.
Okay.
But go on.
So part of what you put on your itemized deduction is your church donation. When I ask some people, can I have a record of your church donation? They tell me, oh no, that's the least I can do. The money I give God, I don't want it back. You are not getting the money back. It's just a reduction of your taxable income. What the IRS is saying is, okay, you've donated this money to the church. There is no need to pay tax on that money. That's all it is. They are not giving you back your money. So if you're making a donation, if you can do it online, wonderful. If you can write a check, wonderful. And if you want to do cash, try and keep a record, because that's difficult for the church if you have to do cash. How will they know who put it down if you don't put your name on the envelope? You know, so I think that's in addition. Try and keep your records from day one, especially if you own a business. I see so many people that leave so much expenses on the table because they don't have records. Your tax preparer is just a tax preparer, not a magician.
That makes sense. But thinking about that, the way you were talking about deductions, I have something that I've been circling in my head, that people need to understand some of those basic terms. What is your AGT? What is marginal tax rate? Credits, tax credits versus deductions, you know, itemized versus standard.
Okay.
Maybe if you can help us with those.
Okay. So, like I said, just for discussion purposes, let's say your income for the year is 100,000. So the IRS looks at that and they say, if you have your mortgage interest, real estate tax, church donations, goodwill donations, and all those add up more than, if you're single for 2021, it's about 12,550. If you're married, it's double that amount. If you're head of household, it's about 18,000. If your itemized deduction is more than that, then show us what you have, we'll go with your deductions. But if what you have is not that much, we don't need any proof. If you're single, we'll give you 12,500 deduction immediately. No proof required. So that is the first step between itemized and standard deduction. So if you have more than that, then you itemize. And if you don't have up to that, you use the standard deduction. And then the next question, difference between deductions and credits.
Yes.
Okay. Now, deduction, like I said, are things you do to just reduce your taxable income, while credits go dollar to dollar against your tax liability. After your deductions, you come to your taxable income. Then on your taxable income, you apply your tax rate. Now, the US tax rate is a graduated tax rate.
So here, your taxable income here is what is called the AGT, right?
AGI,
AGI.
adjusted gross
Sorry.
income. Yes,
Okay.
your adjusted gross income after you take out your deductions, either your standard or your itemized. So after you get to your adjusted gross income, your AGI, then we figure out where do you fall in the tax bracket.
Okay.
From about 0 to, there are 4 tax brackets basically. So you figure,
You
yeah,
fall in
the
somewhere.
higher you make, the higher you pay. That's a summary.
Okay. And then if you would explain to us basically what, taking money out of your payroll taxes, taking payroll taxes out of your money, just like you explained earlier. And for people that invest money, capital gains taxes, what is the difference? And, people say that, the wealthy don't pay. They don't pay because they don't earn money like we earn, we earn money sometimes. So if you can explain that.
Really, for capital gains, you really don't pay anything on your investments as long as you don't dispose them. It's when you dispose of your investments and the difference between the cost of the investment and the sales, the profit you make, that is what you pay taxes on. And most wealthy people, they invest, they don't invest on the short term the way some people do. They keep their money there for so long, and the money keeps growing, they keep getting richer. So
Yeah. So they basically don't pay anything.
yes, until
They don't pay anything, any taxes until they
Sell.
sell. Okay.
So one thing to address, so like Kunle was saying, capital gains says short term and there's long term. If you hold your investment for less than 1 year, it is considered short term. And your tax rate will be your normal income tax rate, which is the graduated tax rate, 12%, 22%, 24%, or 33%. But if you hold it for, even if it's 12 months and 1 day, it becomes long term, which is a more favorable tax rate. If your, the adjusted gross income we talked about earlier, if your adjusted gross income, including that capital gains, is less than 80,000, it is zero capital gains. So whatever you make, they will not tax it. But if your AGI is more than that 80,000, then depending on where you fall, you can either be in the 15% tax bracket or 20%. So that is why sometimes you hear that, okay, the rich man is paying less than the secretary. Because by the time you average out his cost and everything, the percentage of his income that he's paying is probably like 0.002 compared to the secretary who is paying 12%.
Then now I just want to move to, just when we're talking about this, some of the misconceptions that you hear about and you hear about when you talk to filers. And you can take it over from there.
You want to go first?
okay. One of the things I normally get from taxpayers, especially low-income earners, they believe that once you start having children, you get more money. That is to some extent, it is correct. But if you earn a lot of money, it doesn't really count, you know. And there's also this other credit that come to play, the earned income credit. A lot of taxpayers believe that since they've earned income, they have to get an income credit. It depends on your income. For singles, if you earn, I can't remember the figure now, if you earn above the stated amount that the IRS stated, you are not going to get an income credit. And even if you earn below that amount and you did not meet some criteria, like living in the US, having a social security number, and it's the third one.
I guess maybe like having a social security number. You have earned income, not only unearned income.
Yes. So you still won't get the earned income. And for married taxpayers that have children and they are filing jointly, they have their own figure too. If you earn above that figure, you will not get the earned income credit.
What if I add if my mother has been around in the country for a while and she's in the process of, she has a social security number and everything, can I file my mother as a dependent? I've heard that before.
Yes, your mother can be a dependent.
Okay.
In addition to what Broccoli said about the misconceptions, one thing I see a lot, some people think if I file marriage separate from my husband, I will get more money back. That is not true. Most times there's a penalty if you actually file separate from your husband or from your wife, because there are some credits you will not get if that is your filing status. There are different filing status. There's the single, married filing joint, married filing separate, head of household. And there are different rules that apply to the different filing status. There was something else you brought about, you talked about. I think another misconception also, like Kunle was saying, they'll say, oh, but I just bought a house, and the guy at Home Depot told me I bought a house, that I'm going to get a big tax deduction. That is not true. It also depends on if you're going to itemize or if you're doing the standard deduction.
What if I have a house already and I spent I upgraded my house one way. I built something.
Thank you. That's something else I was going to cover, but I guess I was forgetting that. Now, in 2017, when they changed the tax rules, one of the things that was taken out of the code was the unreimbursed employee business expenses. Okay. So if you're a W-2 earner, you cannot deduct any of your home office or whatever. You do not qualify to deduct that. However, if you own your own side gig, your business or whatever, that's one of the deductions you can take. You get the business use of home portion of your home improvements, repairs and maintenance, mortgage interest. There's a bunch of deductions you can get by working from your home if you own a business or if you just own a side gig. But if your only income is W-2, no, you do not qualify to get that deduction.
I hear that there are a couple of people on the floor that have questions. We're going to open it up. Okay. Can somebody help me pass the microphone to her, please?
Thank you for wanting to answer my question. So the thing is, if you have a side business and let's say you never filed any LLC or sole proprietary or have any tax exemption number and you're purchasing things on the side and you're selling some things, do you still have to file that? Because you've already paid taxes on it when you were purchasing the material to actually make the product. So
okay, so the tax you paid, that's a very good question. The tax you paid when you purchased is sales tax. Okay. That is different from your federal income tax. And by the US tax code, every income you earn is taxable income, except if it is specifically exempt from income tax. Like the money some business owners got, the PPP loan, that was specifically exempt from income tax. But yes, you do not need to have an LLC to report it as income.
But
Like-
isn't there like a threshold? Like, let's say, what if you only made like 1,000?
Yes.
You still have to. Okay.
Yes, the threshold is $400. If you make above 400, you're required to file a return on that income. But note, you're not just reporting your income, you also deduct your expenses. So you may have recorded like $1,000 in income, but your expenses could have been $2,000, especially when you're just starting your business. Because even the IRS recognizes that in the beginning, you probably have more expenses because you're trying to put things in place.
Okay, thank you.
You're welcome.
Do we have any other questions from the floor?
Thank you so much. Maybe I need to apologize to you guys before I ask my question, because some of us don't use you. We don't use tax preparers. We do it by ourselves.
That's okay.
Yeah. So
That's
there are
okay.
some softwares out there, TurboTax and so on. Which one would you recommend to be the best?
The IRS use TurboTax, and it is very user-friendly. And I've used H&R Block in the past too. It's also user-friendly. And because of the ease at which I've been using the TurboTax with IRS over time, I think I prefer the TurboTax. That's my own opinion.
So I guess my answer will be biased a little bit because I trained with H&R Block, so I like H&R Block.
Do we have any other questions? Yes.
I would say that whichever one is.
I think I have one question, and it has to do with what she said. If I have a side gig, a side hustle, whatever you call it, do I have to register it? And if I don't register it and say I get paid in cash, do I have to still declare it? Because I hear these questions a lot, and from some things I've been looking into as well, some people say that, no. But I know it's a misconception. I know that whatever comes to your hand, you have to declare. So, but I'm just asking that question.
Okay. Do you want to take it or you want me to go? Okay. So, like I said earlier, every income is taxable income except specifically exempt. Now, you do not need to register an LLC to start a business. However, it is advisable to at least get an employer ID number so you can open a separate business bank account where you make all your transactions go through. If you're paid cash, deposit it, or at least record that you got cash income, and then deduct your expenses. It is actually to your benefit. There are so much benefits if you are doing a good recording and reporting of your business income and expenses. Do you know you can legally hire your kids? And if they are below a certain age, you can pay them and it's exempt from every form of taxation. And you can turn around and invest that income for your child, depending on their age. So long as they've worked in your business and they've earned income, you can invest that money in a Roth IRA for your child. And a Roth IRA grows tax-free for life. So there are so many benefits. There's this misconception about paying taxes. Even the Bible says, give to Caesar what is Caesar's. Do the thing. Take your own. Give government unto government. If you record things appropriately, it is not as bad as it's meant to be. You know, like I said, if you own a business from day one, you're driving to Office Max to pick up office supplies. Your mileage is a business deduction. You're using your cell phone for business. Your cell phone expense is a business deduction. You have a room in your house you use as an office, home office deduction. There are so many things. There are so many things. So just thinking that, oh, you want to, you made $400. If you actually record all your expenses, you may realize you're not making as much money as you think you are.
You post videos on TikTok?
No.
It's not a deduction.
Oh, no. Oh,
No,
no,
but
you mean
if you
for
post
business?
videos on TikTok for your business.
Oh, yeah. Oh, yeah, I thought you were asking if I did.
No.
Yeah, if that is your business and you post on TikTok, yeah, then you can write off a portion of your expenses.
Wink, wink. Wink, wink.
Just make sure you're reporting money too. It's not only expenses.
All right, we want to, I think we're just about wrapped up. Thank you for joining us. I think Ule will give you like a second to talk about Vita again so that people understand.
Okay. We are not actually taking business away from people that, people like Sister Adumkele here that charges people to file their taxes. The people we help to file their return actually need the help. Some people file their returns and they don't get anything back, even though they did not earn a lot of income in the previous year. So if you are not getting anything back, or you're paying, you are going to pay back to government, and you are only filing your W-2, it makes sense for you to look for a place where it can be done for you free of charge. And if you make 58,000 or less, whether the entire household or as a single person, you are free to walk to our office and we will do your taxes for you. And we do this every year.
Thank you very much. Thank you for joining us, and we're out. Thanks. Round of applause for